concise approach to top-down market strategies and the forces affecting investments. That's the spoken word on investing.
Time to get the spoken word on the stock market and check in, as we do periodically, with our chief equity strategist, John Blank, joining me live, well, not live, but recorded via Skype. John, how you doing out there? You getting a lot of rain, huh?
Getting a lot of rain, Terry. Just sitting out in the rain like it's Hawaii in a monsoon.
Yeah. Let's talk about the first 100 days of a new presidency here. What do you see as the main market driver?
Exactly that, Terry. The presidency is the first 100 days. We've got today, Monday, January the 23rd, we have Donald Trump meeting with the head of the new manufacturing roundtable in the White House and giving a very well-reasoned and nice dialogue about the need to focus on renegotiating trade deals. So this is the start of a long series of negotiations of renegotiating the Trans-Pacific Partnership, reopening NAFTA after 20 years, and getting down to keeping jobs in the United States that are going to find a way to create incomes and hope in a lot of areas of this country.
On a related note, you recently wrote a piece titled Death by China. How does that all dovetail?
Yeah, here's part of that, Terry. Death by China is a YouTube Netflix video. It was first on Netflix, now it's on YouTube. You can go ahead and Google Death by China on YouTube and get it for free, even if you don't have Netflix. It's by this guy, Peter Navarro, who is a professor of business at the University of California at Irvine. He has a PhD from Harvard in economics. And he has teamed with Martin Sheen to make a very good hour and 20-minute video on the effects of open free trade with China and what it has done to the United States manufacturing base over the last 20 years. And that is the key to understanding the intellectual underpinnings of what's going on in the White House right now and what's going to go on in Peter Navarro's new trade office that's been set up, and Wilbur Ross and Steve Mnuchin and all the other players that are in this right now at the highest level.
And at this point, too early to tell about any market impact, right?
It's too early to tell about the trade impact because this is a slog of tactics, Terry. It'll go on all year. And all you're seeing now is extreme opening positions. And then the president will negotiate with his team a series of deals that will play out over the entire year and most likely will not hit this market in fundamental terms until next year. But as we know, markets look ahead 12, 18 months. So it's very possible the market will move on it just because it wants to move in advance of it.
All right, so in the meantime, let's talk sectors. Been a little bit of a change in the pecking order as we opened up a new year as far as sectors go. Now you say the financials are very attractive.
Right. Yeah, I'm against the consumer staples and discretionary sectors for a first time in a long time. And the reason is defensive sector like consumer staples, Terry, is 20 on the forward PE. We've got an S&P at 17 on the forward PE. So what you want to do is rotate money you've made in places like Staples, sell those stocks, and go into lower PE stocks like the financials, which are 14 PE. That's way below the average of the S&P 500. That's where the rotation's coming, and that's where this fundamental lift in terms of the Fed rate hikes and the fiscal stimulus and spending and tax cuts that the Trump trade offers going forward, all of that points to financials. And that name I like, Terry, is Stifel Financial, which is part of the holding company of Stifel Nicholas. So take a look at Stifel Financial.
All right, so then we drop down to energy, which you say has become a market weight, huh? What does that mean?
Market weight in the sense you got to look outside the United States for the plays here. Terry, the example I like here is Suncor Energy, which is Alberta oil sands. And it's a Canadian stock based up in Canada for the most part, but it's going to get the bite out of a rising oil price, which isn't going to get crazy high, but could get into the 60s. That turns shale oil on, that turns the stock on, and it's a Canadian stock, so you get some valuation lift out of a beaten up market as opposed to staying in the United States. So take a look at Suncor Energy, and that's why it's a market weight, because of the valuation of the United States.
And finally, material sector is on your radar as well.
Right. Another name I like is somewhat related to Suncor is a company called Tech Resources, ticker Tech. They're based in Vancouver, and they mine metallurgical stuff like copper and gold and silver. This type of company that has really nice margins and a strong mining diversified base. They've also gotten into the oil sands with Suncor on a joint venture deal. This is a kind of play that's being bought right now. They're very, very strong trading action, all three, the last few months, and I expect that momentum stock play on Tech to go forward. But you got to watch this one closely. because it's a momentum stock. So you got to be careful not to hold on to it too long.
All right, that's the latest from our Chief Equity Strategist, John Blank. With John, I'm Terry Ruffalo.